Many of your local homeowners are facing a cut in retirement income. Here's why and what you can do about it.
Click on the banner above to learn more about our sponsor, Fairway Independent Mortgage.
Nothing stings so sharply as getting knocked down just a few mere feet from the finish line. And the Bureau of Labor and Statistics reveals that workers over the age of 55 have been especially hard hit from the COVID-19 pandemic. Workers in that group saw unemployment jump from 3.3% in March to 11.8% in May. But even more devastating is that many older workers over the age of 50 are aggressively saving to catch up on their retirement contributions, especially after the cost of child rearing and college are behind them. That impacts not only their monthly income, but future retirement earnings and payouts. In addition, unemployment may force many to forego a larger future monthly Social Security benefit. Instead, they may have to opt to take an earlier start date with a smaller payout for life. Such is the situation millions of older Americans are facing today as a result of the COVID-19 pandemic and the economic freeze that is now just beginning to thaw. If anything is certain for those nearing retirement today, it is ironically uncertainty itself. Thanks to the CARES Act, unemployed workers can receive an additional $600 a week in benefits through the end of July. Once that boost in unemployment benefits expire, older homeowners who are unemployed or even underemployed have these options to consider. First is to secure their home mortgage. Now, thanks to the moratorium on foreclosures and evictions for homes that have an FHA-insured mortgage, these homeowners do have a grace period through August 31st. The next logical question that follows is, what happens after that? Those who still may have sufficient monthly income and an acceptable credit history or rating could refinance their mortgage into a lower interest rate, and that could potentially reduce their monthly mortgage payments by several $100s, and that would of course improve their cash flow. And while that option seems attractive with today's historically low rates, older homeowners who found themselves newly unemployed are unlikely to qualify. The inability to refinance a home into a lower rate and payment could leave some to seek a loan modification instead, and we know that's a process that's often fraught with peril and frustration. How lenders are going to respond to such a request remains to be determined. And if you remember applying for a loan modification, if you did so during the last housing crash, you can appreciate the hurdles that one must overcome to qualify and the inconsistent communication from the lender. While loan modifications are an arduous undertaking, the easy path of least resistance for some is a mortgage forbearance, and that could ultimately lead to a foreclosure. A Forbes column dated April 16th notes, the CARES Act isn't specific when it comes to what happens once the forbearance period ends. As a result, individual lenders and servicers are setting about different rules on how the borrower must make up the delayed payments. John Olsheimer, an Atlanta-based credit expert who worked with FICO and Equifax, warns of the potential downside to signing up for a mortgage forbearance program. If the lender or servicer demands that you pay back the deferred amount all at once or in an otherwise expedited manner, that could be impossible for the borrower. And as we know, that could mean foreclosure. Unfortunately, having a mortgage servicer asking for a balloon payment once your forbearance period ends is a very real possibility, he concludes. All which leads us to the last option, that is to freeze your mortgage payments altogether, as one New Wire blog so eloquently suggests. Another way to save your money on your mortgage payment is to eliminate the payments. How can you do this? Well, you could win the lottery, or if you're over the age of 62, you can get a reverse mortgage. Now is the time for us to be marketing options, not products. Consider cooperative efforts between a financial planner and even a traditional mortgage broker along yourself. That could yield the best results. A joint workshop on how older retirees and older homeowners can cope with the fallout of the COVID-19 pandemic would likely garner more interest and higher attendance than simply just another class about reverse mortgages. Older homeowners who are retired or who are even nearing retirement, they're looking for a range of solutions and options. The question is, who's going to tell them and which makes the most sense? Now, what are your thoughts? You can leave your comments in the comment section below. Also, if you would be so kind as to share this video with others, you can do that using the social media links found on this page. Thanks again for watching and have a great week.